In this episode of the FXTM educational series, we're going to be taking a look at the moving average convergence divergence technical indicator. Now, most investors are going to abbreviate this as the MACD. The MACD is displayed as an oscillator underneath our price chart, and I have it here. It is basically comprised of an analysis of two different moving averages. The first one is a slow period moving average, so this is I'm going to identify it as the blue line here, which is a 26 period exponential moving average. The second moving average that we're evaluating as part of the MACD is faster. As you can see here, it's crisscrossing the slower one, and that's the 12 period exponential moving average. Now, normally in a study like this, we would assume that if the fast period moving average is crossing above the slow period moving average, then we have building bullish momentum. And if the fast period moving average is crossing below the slow period moving average, then we would say that that's indicative of building bearish momentum. Well, the moving average convergence divergence, or MACD technical indicator, it looks at those periods and it says not just identifying where it crosses, like for example there, but also how much are they diverging from each other, which would indicate accelerating momentum, or converging to each other, which would tell us something about waning momentum. So you can see here, for example, the MACD is crossing above or below a zero line. Now it's unbounded. It can go as high as it needs to or as low as it needs to. And when it crosses above, so I have the MACD drawn here as a histogram, when it crosses above its zero line, then that tells us that's a bullish indicator, and that's telling us that the fast period moving average has crossed above the slow period moving average, and as long as this histogram continues to grow, the MACD continues to rise, and it's telling us that that difference between the two is also accelerating, so that would be a bullish indicator. And the opposite, of course, would be true as well, that when the MACD crosses below its baseline, that's a little bearish, and as the fast period moving average crosses or continues to diverge from the slow period moving average, that would tell us that bearish momentum was continuing to build. Now, let's take a look at the MACD and these moving averages and how they compare to each other on a chart to make it a little bit more clear. So I've not only applied the MACD technical indicator to my chart, but I've also plotted the 12 period and 26 period exponential moving averages as well, so that you can see how the MACD crossing above or below its zero line or baseline coincides with a cross of the fast period moving average above or below the slow period moving average. Now, in general, when it's in favor of the prevailing trend, so in this case, when the MACD crosses above its baseline in a bullish trend, we would look at that as a strong bullish signal that the trend is likely to continue. In this chart, you can see I've plotted the same thing, except that we have a bearish prevailing trend, where we would consider any time that the MACD crosses below its baseline as a significant bearish signal that that bearish trend is either going to continue or reassert itself after a correction. Now, there's a third line here actually on the MACD, and that's a 9-period moving average of the MACD itself. In fact, you can see I've displayed it here as a little red line, and that's what we call the MACD's signal line. So it's a 9-period moving average of the MACD itself. So we would use this in a very similar way to the way that we would use two moving averages, but here it's a little bit more advanced. And in this case, what we're looking for are crosses above or below the signal line by the MACD itself as an early warning sign that we may get a cross of the MACD's baseline. So for example, here we would assume that there's some warning sign of bearish momentum beginning to build as the MACD moved below its signal line and then eventually did actually cross below its baseline. You can also see here where the MACD crossed above its signal line very early before it actually crossed above its baseline right there. So we would say that that is especially in a bullish trend, that would be a very early warning or an alert that bullish momentum could begin to build, and investors should be alert to that. Shorts should certainly be wary, and longs may be looking for early entry opportunities. Let's look at a chart example of exactly this relationship between the MACD and its signal line. So this is a follow-up from my first example of the MACD crossing above or below its baseline. And in this case, before that bullish cross of the baseline, we actually had the MACD moving above its signal line, providing an early warning that bullish momentum was beginning to build. The MACD is an excellent indicator to use to evaluate the strength and momentum of the underlying trend, and to look for trading opportunities in favor of the current price direction.